Welcome guys and welcome back on this channel. Today we are taking a look at the crypto and stock market to see what will most likely happen in the near future. But before we are getting started, I have to give you a very big thank you. The last video that I put out, the XRP price prediction, went crazy. You guys gave me a lot of positive feedback. Almost 200 new subscribers are now new to this channel, and I just want to say that I really appreciate that, really appreciating your support. And because now there are this many new subscribers, I want to make a video where I show how the market looks like right now and what most likely will happen next. So again, a big thank you to you guys, and now let's get started with Bitcoin and the crypto market. Since the last weeks, we saw good gains in the crypto market, followed by a big pullback pretty exact 1 week ago. And I have to say that since the beginning of this whole upward trend of Bitcoin and cryptos, so since Bitcoin went below $4,000 and then quickly recovered, since then I see very much confusion. Some people are bearish, some people are bullish, some sit on the sidelines and wait for the next entry or didn't even know what to do, if they should trust this rally or not. So now let me show you what my analysis and my indicator is telling us. Right now you are seeing my indicator, and this is a self-developed indicator. I call this the buyer index, and to shortly explain the buyer index, as the name says, it is an index for how many buyers are in the market right now. And if this buyer index will reach dangerous levels, so in other words, if there are too many buyers in this market, then it's most likely that there will follow a correction in the near future. I already did a detailed explanation of this indicator. If you want to go through it, then I will link this video right here. As you can see right now, the buyer index is right here. And of course, it is rising over time, but the dangerous levels are not reached yet. The dangerous levels start about 5 to 10 in this chart, so there is still more space to grow. To say that in numbers there is between 45 to 60% more space in the buyer index before we will reach dangerous levels. And I always say this in my videos, don't get that wrong. That doesn't mean that Bitcoin, for example, will now go up 45 to 60% and then we are hitting dangerous territory. That just means that there is more space for 45 to 60% more buyers in this market, and how fast this 45 to 60% will get filled up is something that we don't know. Can be that this will fill up very fast, so in the next week or two, but it also can be that it will take its time and will be filled up in 1 month, 2 months, or even more. That means as long as there is space in the buyer index and as long as it is not at dangerous levels, I will stay calm, bullish, and I will keep my crypto positions. Of course, if there should be any changes, then I will give you an update on this. Now let's switch over to the stock market. Here it is the same thing as in crypto. I also see a lot of confusion because the markets are looking very irrational, and I can totally agree on this. If you just look through the charts, then it looks very irrational. That is why it's so important to take a look behind the scenes, and that is exactly what we will do right now. But in this video we will only take a quick look at the numbers because we are in a Fed, so the Federal Reserve Bank, driven market, that means it is really important to understand how the Fed is working, what inflation and also the money supply has to do with it. I already did a couple of videos on that where I explain that in detail. If you're interested in that and want to know the details, then I just can recommend you to watch these videos. You can all find them on my channel. But now let's take a look in the numbers and what they are saying. Right now you are seeing the supply chart, which is also a self-developed indicator. Here in this indicator you can see a blue and a green line. The blue line represents the price and the green line represents the supply. In this index it is very good when there is a lot of supply, so then most likely in the near future the price will rise, and if there is a low supply then most likely this is followed by a price correction. As you can see here, back in February the supply was very low, and then this was followed by a big price correction, which I'm sure all of you have seen. Then in the price drop, the supply quickly filled up a lot, and then this was followed by an outstanding rally in the stock market and also heavy support in form of money printing by the Fed. That is also why here the last time the supply chart was very low, this was back at the beginning of June, the price didn't correct that much because the Fed is supporting this market heavily. You always can see little price drops, but nothing compared to what happened back in February. But that is also why I put out a warning video when the supply was very low, that it is likely that we will see a correction and that I closed my long positions and only will open small positions with very low risk. Till now I've kept that up, but we are seeing that the supply chart is rising again. Right now we are here. And by the way, these green lines that are going down here to the lowest points, these are just little mistakes of our analysis program. That is nothing bad or dangerous. You just can ignore these mistakes. So right now we are here, not at the highest point, but this is also not bad. And now we also have to consider in our analysis that the Fed is supporting the stock market heavily by printing trillions and trillions of dollars, and most likely they will keep doing this till the inflation will pick up too much, because then they have to stop printing money. And if this happens, then this could get very ugly, but we are not there yet. And right now you might be thinking, but wait, they are printing trillions of dollars, why the inflation is not going up this much? And for me there are two reasons for that. First one is the official inflation is a lie. It is manipulated, but even if this is fake, or let's express this differently, it's calculated to look good, but even if this calculation is wrong, the inflation still would hit the economy. And the only logical reason why this didn't happen till now is that most of the money that is printed is not going to the average people that would go out and buy something with it, that would spend it. Most of the money is going into assets, and there the prices are going up a lot, but not in the real economy. And as long as this is not happening, most likely the Fed will continue to do this. But we are tracking the money printing that is done by the Fed, and before they are not pulling money out of the market, it's very unlikely that there will be a bigger correction like in February. Summarized, that means that also here most likely the top is not reached yet and the rally will continue. How long this rally will continue, we will have to wait and see. Always look what the data and the numbers are telling us, and of course, as well as in the crypto, if there should be any changes in the stock market, I will do an update video on this. I hope this video was helpful. If it was, it always helps if you leave a like. If you have any questions, or maybe if you have another opinion, then feel free to write that down in the comments. Subscribe to this channel because I put out a valuable video every week, and this way you won't miss it. That's it for this video. See you in the next one, and as always, have a nice day.